Good morning to all of you. We are going to take you through kind of a normal program for this kind of presentation, starting with the highlights over Q3 financial year 23, before we are moving into an operational update, giving you more granularity on the financials, and of course giving you some insight also on how we look at the outlooks. But let me start with the highlights of the quarter, which has been a kind of a different quarter for us, where anticipated seasonal variations or seasonality has impacted our health business. This was communicated and expected before we went into the quarter, where market conditions within, especially the shrimp market, market headwinds within the shrimp market has impacted over advanced nutrition business. This was also expected, as we have the same experience from several quarters now in that business area, and where more quarterly specific issues has impacted the financials of genetics. Regardless of this, having now moved to a quarter that we knew from the outset that was going to be more challenging, we are satisfied that we have come through the quarter in a decent way, keeping the momentum in the business, but also keeping the momentum in the year, and we are expecting to land the year within the expectations when we are finishing Q4. Before moving more into granularity, let me throttle you to the highlights in terms of numbers for the quarters. The adjusted EBITDA, the top line ended at 34.4 million. That's a reduction from 36.3 million in the third quarter last year. Over adjusted EBITDA, excluding fair value movements, which is the measure that we are doing on that now, ended at 3.6 million pounds, which is also a reduction from last year, where we ended at 5.1 million. And the reasons why we have this reduction in both the top line, but also in the adjusted EBITDA, is reflected in my initial comments that I will also give more insight into as we are moving through the presentation. Our adjusted operating loss, excluding fair value movements, are 1.7 million for the quarter. This is an expansion of the loss or our operating loss. But in the contrary to that, our loss before taxes have substantially lowered to 4.7 million in the quarter, which is a substantial reduction compared to last quarter. So all in all, as this quarter has been a challenging quarter, and that was expected from our side, entry into the quarter, we are not particularly happy with the numbers for the quarter itself. What we are happy about is that we year to date have kept the momentum in the business, and we have advanced significantly throughout the year. Revenues are up with 15%. Adjusted EBITDA, excluding fair value movement for the first 9 months, is up 27%. Our adjusted operating profit, excluding fair value movements, are up 207%, which is a tripling. And our loss before taxes are very, very significantly reduced compared to last year. Also worth mentioning, and this is an important measure for us, is that our operating cash inflow for the year is 11.2 million, which is a very, very substantial improvement compared to last year. So happy that we have kept the momentum and delivered the first 9 months in a good way. Worth also mentioning on the highlights of the quarter is that we are continuing to work on streamlining the group. We continue to seek to take out synergies where it's possible, to make sure that we are as agile as possible, to make sure that we operate the group as efficient as possible. So to that end, we have executed an alignment between our organizations in our health business area with our organization in the salmon genetics part of our genetics business, forming a new business area called the salmon business area, which has common leadership with a combined offering to the same customers within the, let's say, within the salmon industry. To do this, to take out synergies, we do this to streamline our operations, to sharpen our commercial operations towards that common pool of customers throughout the world. And it's a natural development for Benchmark. It's a development that shows up also to work very well. We will, of course, continue our effort to seek synergies, seek to take out efficiency in the organization also on other areas going forward. This is a natural development of Benchmark in order to make us as efficient as possible going forward. Moving over to the operational update, and let me start with genetics, where we have seen growth on the top line in the quarter. Our revenues are up 10%. This is due to increased sales of salmon eggs from our core genetics activities, which is out of Norway and Iceland. In total, we sold 68.5 million eggs in this quarter this year, as opposed to 59.4 million eggs last year, which is a considerable lift up, which shows that we continue to advance in our sales and volumes in terms of salmon eggs from the core salmon business out of Iceland and Norway. Besides what we have in our core salmon genetics part of genetics, we also have other activities within genetics. We have a fully established program in Chile, where we've done the ground investment, and where we are having putting effort into penetrating the market in a responsible way, filling the capacity of the invested facility that we have. We have a facility there that can produce up to 50 million eggs. And we are working with customers in order to fill that order book into the periods that are coming. We have advanced and had progress on that during the quarter. We still have some miles to go in order to get where we want, but we have had progress and making this business also a profitable contributor to the total salmon business that we have within our genetics business area. On the SPR shrimp program, which is our shrimp genetics program, we have, and I also told this during the presentation after our first half of the year, we have concentrated our effort this year and also in this quarter to improve the genetics that we have. We use the experience we had from the first round of commercialization from 21 and into 22 to do that. The shrimp market, shrimp genetics market, is a little bit different than the salmon market. One size doesn't fit all, and we are tuning our genetics to make sure that we are fitting the market in a better way, strengthening our position going forward. In that period, and during having that as a main focus, we have reduced our commercial activity within shrimp genetics. That, together with that the demand is impacted by the shrimp markets, which are weak at the moment, has impacted the commercial progress in that part of our genetics business in the quarter. In tilapia, we have advanced our strategic review. This is also something that is repeated from previous quarters. We have been clear for a couple of quarters now that we are not happy with economics or financials from our tilapia genetics. And we are doing a review in order to rectify that. That review is now well advanced, and we hope to end that review as soon as possible to make sure that we are changing the picture that we have seen consistently within that part of our genetics business going forward. Yes, we have increased our top line due to increased sales of eggs from our core salmon business out of Iceland and Norway. But if you look at our financials, you see that the increase in top line is not reflected in our adjusted EBITDA, and that requires some special explanation and special attention. Yes, the increased egg sales from our core salmon business has indeed increased our earnings. To be more precisely, by 2.8 million pounds in the quarter, if you compare it to third quarter last year. But this has been offset by what I partly call quarter-specific issues. First of all, we, as any company, we are impacted by cost inflation, and we see that also in our genetics business. The effect of that on COGS, but also on OPEX combined, is around 1 million if we compare it quarter on quarter, this third quarter compared to last third quarter. This is, of course, inflationary effects that we work very hard to mitigate, and over time. We can do that by increasing prices, but also to operate more efficiently, and we are on both of those issues to try to mitigate those effects more in the time. Then to two more quarter-specific issues. First of all, we have a normalization in proportion of the biological assets capitalized in the quarter. If you look back to third quarter last year, we had we were looking into sales, extraordinary sales into Q4. That resulted in adjustment in biological assets that was reflected in our numbers in Q3, at the end of Q3 last year. This is not replicated the same way this year. Yes, we have an increase in biological assets also in third quarter this year, but not to the same extent as last year. And if you look quarter on quarter, the negative effect in this quarter is 1.3 million, taking down our results compared to the third quarter last year. Then another quarter-specific factor is related to a harvested fish. This is fish that we own, but it's not operated by us. It's operated by a third party. We own it, so it's reflected. It goes through our P&L on top line and results. During this quarter, we have harvested fish, and I will say the third party has not been very precise in selling it at the highest price point in the quarter. So that's one effect. The other effect is that we have had unusual high cost related to that harvested fish. And if you look quarter on quarter, that has an effect of 1.1 billion compared to last year. Then finally, we have encountered forex headwinds. The Norwegian krone has been weakened significantly, and a considerable part of the sales we do of salmon eggs is into the Norwegian market, and this affects us by 0.6 million in the quarter if you look at quarter on quarter compared to third quarter in last financial year. So this summarizes the explanation why you see the difference between the increase in top line. It's not reflected fully in the adjusted EBITDA that we are presenting for the quarter in this business area. Before moving into the next business areas, just let me give an overview of the composition of the revenues and earnings from the different parts of the business of the genetics business area. This is a graph that we a setup that we introduced last quarter, and that we have gotten good feedback on, because it envisions, you know, how the composition between earnings and revenues are between the different parts of the genetic business area. As you can see from this, the financial backbone of our genetic business is related to the core salmon business out of Norway and Iceland. That also includes the harvested income. You see here we have a solid, very profitable business. And even if it's affected in this quarter, you know, it remains a very solid business. On the flip side, we have three growth vectors that is impacting our total performance within genetics area negatively, and continues to do that. That's our salmon business in Chile, our tilapia business, and our shrimp business. And we are working very hard on all three of those to change the picture that we have seen consistently, and to become a positive picture going forward. Then moving over to the next business area, which is our advanced nutrition business area, where we've had adverse market conditions. And this is not something new. This is something that we have had for the last year, and it's in particular linked to a weak shrimp market. The shrimp market is the main market for our solutions and our products within advanced nutrition. The weak markets has been impacting us on the top line in the quarter, which are down by 17% compared to last year. A little bit more granularity around the weak shrimp markets. It all stems from reduced customer demand on shrimp. That has been significantly reduced over the last year. And just to envision that a little bit, the two big importing markets for shrimp globally is the US and Europe. And it's expected that the imports to these two markets will go down in between 20 and 30% this year. So a reduced demand of shrimp creates overproduction throughout the world, creates bigger inventory, creates pressure on the farm gate prices to our clients, which are the shrimp farmers around the world. They have also been impacted by cost inflation, especially on feed, making the situation for the farmers even worse. So what is their reaction on that? Well, they are reducing their stocking, and reduced stocking, of course, impacts the ability we have to sell into that market. This is not something new. This has been with us for the whole year. If you look at our performance, despite this headwind in the market, we are satisfied that even if we went down on top line in Q3, for the year to date, we are actually head to head with what we performed in last year. We're also very satisfied that despite the drop in revenue in Q3, our adjusted EBITDA is up in the quarter compared to last year. This is due to product mix, lower freight costs, and ongoing efficiency program. And our advanced nutrition business team, or INVE, have really met the headwinds in a very strong way. It's a very agile team. It's a very strong commercial team that has been able to mitigate a lot of the effects, but also implemented cost efficiency programs in order to take down the cost, given the market situation that they are facing now. We expect the situation within the shrimp markets to continue to be difficult for a while. But given the organization and the positioning we have in this business, we are very well placed in order to take up growth to a bigger extent when the market again turns. Moving over to the last business area, our health business area, where we have been through a period, and this was anticipated, a period with low seasonal demand for medicinal solutions for sea lice treatment, which is what we do in this business area. We have two products, Ectosan CleanTreat, and we have Salmosan. We knew when we entered into the quarter that we entered into a period where the demand for those solutions would be lower. This is very much like what we experienced last year. So it was no surprise to us, even if we are not particularly fond of seasonal lows and periods with low activity in our business. So why is it? Well, when you're moving into the summer and relate to the Norwegian market now, where we are placed with Ectosan and CleanTreat, in the summer period, which is a period with lower sea lice pressure, the farmers prefer to use a combination of fresh water / mechanical treatments to control the sea lice. They're doing that because they have installed capacity on that, and the pressure on sea lice is less. So they tend to wait to use our solutions, medicinal solutions, till periods with increased pressure of sea lice, which is coming from early fall on and out onwards, like it has done over the last year. That they do, so they are postponing the use of our solutions, even if they acknowledge that it's a very efficacious and very efficient way of getting sea lice. They are sparing that for periods with more intensity in sea lice pressure. This is reflected in our numbers. We see that top line is very much in line with what we showed last year. Revenues are down in the quarter compared to last year. But if you look at both revenues and adjusted EBITDA for this business area so far, we see that we have a very, very significant uplift compared to last year, which reflects the progress that we have had in this business area over the last year. As I've been telling you about in several quarters now, we are working to optimize the business model within this business area to be more adaptable for the customers, to be less costly, less capital intensive for us. The key to do that is to change the business model around Ectosan CleanTreat and to integrate the CleanTreat system into the infrastructure of the customers. And the way we do that is that CleanTreat, we are aiming at integrating CleanTreat into the wellboats that the customers already have. A key in that process is the relationship we have established with MMC and Salt. MMC, a leading technology provider to wellboats, and Salt, a leading design company on wellboats, that enables us to do this integration into wellboats that comes into the market going forward. We made good progress in that cooperation going forward. We have solutions in place, and we are now working with customers to get it executed in the market. What I said last quarter is that we are targeting the first signing of such a solution in the fall this year, and I still uphold that as a target for what we are doing there. And eventually that will bring the business model to a much more attractive business model for us, where we move from being a medicine provider and a technology provider in this area, become more a medicine provider, which has always been the target for us and that we have been working hard on for a while. With those things, I'll leave it up to you, Septima, to go through the financials.
Thank you, Trond. So Looking at the income statement, I'm going to talk to the quarterly progress and also how this feeds into the overall year-to-date picture. So, as Trond noted, Q3 evolved as a slower quarter, as we previously guided when we reported our H1 results back in May. But overall, we maintained the growth that we'd achieved in the first half of the year. From a revenue perspective, Q3, this fell by 1% at a constant exchange rate. This was driven by higher health and genetics sales, offset by lower nutrition sales. But at an actual exchange rate, this reduced by 6%. That was driven mainly by the weak NOK to GBP rate in the quarter. But from a full year perspective, this grew at 15% at a group level, and this shows the strong start that we had within this financial year. Gross profit in the quarter decreased by 11% to £17.3 million. This was due to a number of factors. In health, the sales mix for Salmosan, from a country perspective, drove a reduction in the gross profit by £0.7 million. Genetics were impacted by the factors highlighted by Trond, and as well, of course, the weak NOK GBP also impacted the gross profit. And then nutrition, despite lower sales, incrementally increased its gross profit in the quarter by £0.2 million. And this was due to the good sales mix, the lower freight costs, and also FX tailwinds. But even with difficult market conditions within Q3, we still maintained growth of 12% for the year to date, and also a gross margin of 50%, which we see as a good outcome. R&D grew slightly in the quarter to £1.5 million. The main element of this increase was to increase our activity in our genetics team as we advance our genetics programs. This growth in Q3 offset an overall R&D reduction in the year-to-date period, leaving us at 4% below last year's levels. Operating costs in the quarter decreased by 6% at a constant exchange rate to £10.6 million. As we've exercised good cost control across the group to mitigate the drop in gross profit in period. The strong cost control in Q3 helped ease the increase in OPEX that we'd seen on a year-to-date basis, back to 11%. Adjusted EBITDA reduced by 13% to £3.6 million in the quarter, driven by the drop in gross profit, but offset in part by the cost control. And correspondingly, adjusted operating profit dropped to a loss of £0.2 million. Exceptional costs in the quarter were flat versus last year and relate mainly to costs associated with an aborted acquisition versus restructuring costs in the same period of the last year. Within exceptional costs for the full year were also costs associated with the establishment of the dual listing that we now have between Oslo and the UK. Net financial costs reduced by £7 million in the quarter, reflecting credit movements on hedges of £3.4 million and FX of £4.4 million, and lower amortization of deferred financing costs of £0.1, all of which were offset by increased net movement on interest and lease interest costs of £0.9 million. This drove our loss before tax down to £4.7 million versus £11.2 million in the same quarter of last year, and to £6.6 million from £16.4 million for the year to date. Also, it should be noted, with lower profits in genetics and nutrition for the period, our tax charges were reducing, resulting in a loss before tax in the quarter of £4.6 million and £8 million for the year to date. So moving on to look at the cash flow. Overall, the cash flow for the year to date is moving in the right direction. With cash generated from operations of £17.6 million, we're continuing to progress towards positive cash generation. This was then supported by more moderate CapEx of £4.7 million as we seek to control investment and conserve cash. The main investment was completed, of course, which was our new tanks in Salton to bring the capacity up to the 150 million eggs. Now, this CapEx remains in line with the full year guidance of round CapEx being between £6 and £8 million in the year. And of course, as previously noted, we acquired the remaining minority shares for our Icelandic operation within our genetics business, £8 million in the first half of the year, a strategically important part of our core genetics business. The cash out for £12.6 million for interest and taxes reflects cash interest costs of 6.3 and cash tax of 6.3. Pardon me. It should be noted we pay tax in our profit-making jurisdictions, which are mainly Norway and Iceland, part of our core salmon genetics business, and in Belgium, which is a core part of our nutrition business. During the third quarter, we also received £1.3 million of deferred consideration associated with the divestment of the improved business, which completed in 2020. This is the final deferred consideration payment associated with that divestment. And of course, the net proceeds from the December 22 equity issuance associated with the new Oslo listing of 10.9, all of which contributed to us ending the third quarter with a net debt position of £66.9 million. With cash of £33.8 million and liquidity of £46.1 million, we continue to have a stable financial position to continue to move the business forward. So moving over to look at how we're tracking versus our KPIs. From a sales perspective, we've delivered year-to-date sales growth of 15%, within the medium-term targets of 15 to 18%, but reflecting softer market conditions in nutrition. The adjusted EBITDA margin of 20% has softened since the half year due to the negative margin from health, diluting the overall business as a consequence of the lower sea lice season. Cash conversion remains a significant area of focus to bring it from the current 41% to the target of 80% in the medium term, with increased and consistent focus on working capital to allow us to release some of the cash held within this area. And finally, free cash flow as a percentage of sales. Within this metric, at free cash flow percentage of 0%, moving from -8%, we are moving towards our targets through significant discipline around CapEx, which we will continue as we move towards that target of 10 to 15%. And with that, I hand you back to Trond.
Thank you, Septima. As you understand now, we have gone through a more challenging third quarter. As I started saying, we are happy that we managed to do so, keeping the momentum in the business and keeping the momentum in the year, and we are expecting to land the year within market expectations. Be a little bit more granular on the three different business areas within genetics. As I pointed out, the main economics or financials comes from our core genetics activity out of Norway and Iceland. We are still in the same situation that we've been for a good time there, with good visibility on salmon egg sales out of both those locations. Last year we had extraordinary high sales into Q4 due to very specific circumstances in the market and due to the situation of our main competitor. We don't expect that to repeat to the same extent this year. But if you look at the year in total, we are expecting to have significant growth in the number of eggs, salmon eggs sold out of our core genetics business out of Iceland and Norway. A core for us in genetics is, of course, to focus on the three growth vectors. We have very strong focus on Chile now, where we are progressing in getting new customers to sign up to fill the capacity that we have established in that market. This will take time, but we are progressing and we are focusing to build that customer book into not necessarily Q4, but into the year that we are moving into, the financial year 2024. On advanced nutrition, where we have expected adverse market conditions linked to the weak shrimp market, we expect that market conditions to stay with us for a while. Eventually it will turn. The question is when, and it's difficult to predict. So we expect those market conditions to stay with us for a while. That will, of course, impact the pace of that business, even if we have been very good at mitigating the effects of it so far this year. We are looking at a picture that is somewhat different from what it would have been if the market has been more normalized or if it has been blooming. It's definitely not blooming at the moment, so we're working in a difficult market. I must say that we have been very good at handling the situation in this market, and we are very well positioned in order with the organization we now have in place in advanced nutrition to take advantage when the market eventually is turning. Meanwhile, we are of course concentrating on what we can do something with. We cannot do anything with the market for sure. So we are concentrating our efforts to do the best out of the market. And as I said, I'm really happy with how we have been handling that so far, even if it's impacting us and probably will impact us in the near term compared to what the situation would have been if the market has been more normalized. Moving into the health business area, we have now been through the slow summer months. We are now moving into the main sea lice season. We expect that will become reflected in our numbers from, I would say, second half of our Q4 and into the main sea lice season, which is into Q1 next year. And we continue our efforts in order to change the model to be more cost effective, more adaptable, less capital intensive. And that's a key for us in this business area, and we continue our effort there in order to advance that in the period. So that really summarizes how we look at the things from now on. Let me just use the opportunity to just repeat again why we think Benchmark is such a unique opportunity, why we think we are a unique bet on the aquaculture industry. We define ourselves to be a market-leading aquaculture biotechnology company, having three business areas: genetics, advanced nutrition, and health, where we hold market-leading positions in what we do. And this is a key in our strategy. We are on areas where we are market-leading or where we believe that we can be market-leading. From these three business areas, we are providing specialized, highly specialized, mission-critical products and solutions. And this is also key to our strategy. We are only in highly specialized products. We are not in commodity. All our products are mission-critical solutions, meaning that the customers or the farmers need our product, which is, of course, taking down the dependency on fluctuations in the market. As long as they farm, they need our product. And we are providing these products through a unique global network. We are meeting customers or selling to customers in more than 70 countries every day. We are present in 26 countries, truly an international company, truly a well-positioned company in the aquaculture industry that is a young industry, growing, and has the future in front of it. So with those words, pitching why Benchmark is a good idea, I think we end the presentation and we are open for questions.
Thank you to you both. We have a number of questions. Is there any update on the deliberations about whether to retain the LSE listing? Is this contingent upon an uplisting, beg your pardon, to the main market in Oslo?
The short answer to that, it's no update from the statement that we issued at the end of last quarter. We still have the same holding statement around that. There has been no development around that, so there is nothing new to report around that. I'm not sure if you want to add something there.
Yes. So just to reiterate, at the half year, we stated that it was our intent to maintain a dual listing, both on AIM and also on Oslo Euronext Growth. So it is not contingent on an uplisting to Oslo Bourse. We are going to maintain the status quo. And that was done as a consequence of the shareholder consultation process that we undertook.
Could you give a little more colour on the shrimp market and when do you think it will turn? I get the impression Q3 is worse than you thought at Q2.
I'm not sure if it has been worse, to be honest. I think we're very clear on that. That we had a headwind in the market related to the shrimp market when we entered into Q3. So I think the picture has been developing more or less as we expected. We see the effect on top line, but I think we shows the effect on the EBITDA shows that we are working well in that market conditions. More granularity on the situation. It's all related to the demand over the end product, which is shrimp. And as I pointed out, the big consumers of shrimp is US and Europe. Imports are down, estimated to be down, and this is not numbers from us, it's independent numbers, 20-30% during this year, which of course impacts the whole value chain and the farmers, and taking down the stocking, which again takes down the demand for our products, and that's the situation. And our view now is that this situation will stay for a while. If I had somebody who can tell me exactly when it will turn, it will be a very valuable information. We are equipping ourselves, we are installing ourselves in a way that we expect that this will continue to last for a while, and making sure that we do whatever we can in order to mitigate, whatever we can in order to take the best opportunity out of the market that is there. And we are having a very, very strong organization. In my personal view, but I think I'm quite sure of it, we have been winners in this market. We know that other players have had significantly worse effect of it than us. So I'm happy with how we have been responding to this, and we are very well positioned to take advantage when the things turn, and they will turn.
Okay, thank you. How big could Chile be for you in the next few years, and in particular, do you have any sense of how many eggs you could sell there?
Yeah, we have established facilities and a system down there to sell 50 million eggs. And that has been communicated over a long time. We've done the groundwork very well. And we have a good organization. We have the broodstock in place. We have now the results from the first round of the pure Chilean strain that we have developed and installed in Chile, and show that we have a very competitive strain, which is a key, of course, to get customer traction around our product. We expect that we will be able to fill that capacity and take a meaningful position in that market over time to come. It takes time. We have a very capable competitor down there, and it takes, of course, time to penetrate the market in a responsible way. We see that we have customers wins. We are working very actively with the customers in order to build the book going forward. So over the coming 2-3 years, I think we will be able to fill the capacity that we have installed there. And then we have a viable, good business also in Chile. Chile is the second biggest production region for salmon. Then we are have a leading position out of Norway, leading position out of Iceland, and are a very meaningful position into the Chilean market, and a very complete offering and position within the salmon genetics market, which is, I think, the most interesting part of the aquaculture genetics market.
Okay, thank you. Couple of questions here around Ectosan and Clean Treat. One is, can you please give a little bit more guidance on how the new model with the outsourcing to the customer, so to speak, will impact revenue and gross margin? And the other one is around what you're going to do with the vessels that you currently carry on your balance sheet. Are you going to put them up for sale, or what's the plan there?
Would you like to answer that, Septima?
Yes, thank you, Trond. So from a revenue and margin point of view, we've always been moving towards this model. So when we initially spoke about the revenue and margin associated with the Ectosan Clean Treat business model, we spoke about it excluding the revenue associated with leasing the vessels. So inherently, the revenue and margin assumptions have not actually changed. They've just become a clearer business proposition. So the initial and maintained guidance is that we see that the global market for Ectosan Clean Treat is 75 million, of which Norway is 50 million. And that the margin, the adjusted EBITDA margin associated with that is up to 60%. It ranges between 50 and 60% in the long term, in terms of once we've got kind of embedded capacity within the market. So this has always been the end game, to move towards being a more pure play within this business area.
And on the question of the vessels, we would like to take out those vessels and not sit with the exposure of those vessels. I think it's important to understand that they have been an absolutely necessary vehicle for us to launch this solution. So it was a necessary way to enter into the market. We've used them now for 2 years, building adoption of the solution, building customer knowledge and customer acceptance of the solution. Over time, of course, we are looking at not having that exposure into our balance sheet at all. And we think that exposure belongs in the integrated infrastructure of the customers. And that is what we are aiming to do as soon as possible. So that's the journey that we are on, working hard in order to achieve as soon as possible in the time to come.
Thank you. A couple of questions around the synergies for health and genetics. Firstly, will you continue to report them separately, or will they be merged as part of salmon genetics? And two, at a customer level, is it the same person department who's purchasing both the genetics and sea lice treatment?
Answer to the first part of the question, yes, we will continue to report it as separate business segments. And I think that, it creates clarity so there is no reason to change that reporting. What we're doing is to align resources towards common customers, and that answers part two of the question, which is there the same person? Yes, broadly yes. Of course, decision making when it comes to genetics might sit down in an organization somewhat another place than decision making related to sea lice treatment. But all in all, we are talking with the same group of people, with the same leadership also in the customers. So it really makes sense to align that, to come to a customer with two sets of products, with two sets of commercial teams, really doesn't make sense. We are talking with the customers on solution, both genetics, but also on the health products jointly. And that's really making it easier, more efficient, both for us and the customers. And that's why we are doing this.
What are the strategic options under consideration for the tilapia business? Are you looking at any kind of a sale or a wind down?
goes without saying that when you're doing a strategic review, you know, we are looking at different options. One of them is the sale. We are very determined to change the picture on the financials around tilapia, which is you know, taking the performance down on the genetics area. So we will find a solution that will end that. I think regardless of what happens, you know, we have genetic services as part of our genetic offering. You know, there are two parts of what we are doing in tilapia. We have genetic services where we are providing services, profitable services. We'll probably keep that, or that will be kept. But cost is related to having a broodstock, to have a breeding nucleus, you know, and that needs to be solved. We cannot, with the profitability which we see within tilapia, we cannot continue to just believe that comes through without doing significant changes, and that's what we're going to do.
Thank you. Couple sort of final wrap-up questions. I mean, bigger picture, what do you think about, you know, rising sea temperatures and their effect on your business? I assume we'll all be worrying about other things, but do you have any strong views on that particular subject?
No, I think everybody needs to take global warming seriously. I think in all places of the world, I think it's evident that will impact us, you know. For us, I don't see any immediate effects. I think in a way it probably could work to our advantage. You know, we are a provider of solutions to make this industry more sustainable. We are a provider of solutions that solve some of the problems that comes out of the effects of global warming. So for our business, you know, no immediate effect, but more like an opportunity, and we definitely take our responsibility as a responsible company to do our part in order to make sure that we bring this world to a more sustainable future.
Thank you. And finally, and I'm sure to your frustration, the business has changed dramatically since it was first listed back in 2013. You're still valued below your IPO price, despite steadily improving business over the last 2 to 3 years. I know we're due to publish, we haven't just yet. Perhaps you can speak to any other numbers that have been put out by brokers into the market in the last day around timeline to profitability.
So yes, and I think we can all agree, we share the frustration that everybody sees within the share price. But part of our role is to try and drive that business towards profitability and cash generation. They have to go hand in hand for us to truly create the value that we see in the company. And you know, you will be able to see from, you know, that the brokers that have already published that there is, you know, a pathway, clear trajectory, and has been over the last number of years, a clear trajectory through the improved trading, through the progress that we've made operationally and strategically towards that cash generation and profitability. So in terms of that, that is one of the key sort of linchpins that we see of unlocking the value that's inherent within the businesses that we run. So it's an absolute top priority from a benchmark point of view.
Good. Well, we'll look forward to publishing something ourselves shortly. And that is it for questions. So thank you both for your time today. Thank you for our participants and a good range of questions. And we will see you in November.
Thank you, Hannah.
Thank you.
Thank you, everyone.